Shut up and sit down.
All right, welcome back, everybody. Today's date is May 4th, 2018. This is, what episode is this, Jason?
This is episode number 15.
And that's the Gluten-Free Jason Bessing, keeping us on check.
Gluten-free.
How are we doing today, people?
People or me?
People.
Oh.
And you are people, right?
Okay, yeah, I can qualify. I was waiting to see if they were going to respond. I'm doing good, Nathan. It's Friday. Taking a quick trip to Atlanta tomorrow. Literally just staying the night in Atlanta tomorrow. And we're going to go to the baseball game. So that'll be fun. But yeah, I'm just excited the weekend's here.
You want to see the Braves play?
Yeah, but my sister's a Giants fan.
So you're going to go watch the Giants play?
We're watching the Braves play the Giants. Should be a good game. I'm not into baseball, but it should be a good game. Apparently, they're both ranked pretty well right now, or they're both doing pretty well right now.
Professional sports games in general are just fun to go to.
Yeah, for the most part. I mean, it's just it'd be hard for me to go to an NBA game, but I'll be honest with you, Nathan. If you wanted to go to if you were just dying, let's go see a Magic game, I'd probably go with you just because I'd get shit-faced trashed.
Yeah,
and you can't put a price on that.
Well, you can,
because then there's always a story oh, you remember when Jason puked at the Magic game?
Puked on the fucking court. We sat courtside.
We sat courtside of the Magic. Dude, I bet you can get a courtside ticket to that Magic game for $112.
No way.
No, I'm just kidding. They are cheaper than a Lake.
Pencil me in. That's because people like Jack Nicklaus and really expensive people, LA people, pay to sit out there
with his sunglasses.
Yeah.
Dude, doesn't he go to every game?
He's there a lot. I know that.
Yeah, get a life.
I could assume that. Yeah.
A fucking life. Anyway, so did you happen to watch the market today?
Dude, I worked all day.
We had a decent run up. And
I haven't even checked.
We had a decent run up on everything. Your leader today is the NASDAQ. Let's go ahead and start there. NASDAQ starting up 121 points. Pretty decent move. S&P moving up 33 points, and the Dow fucking Jones moving up 330 points.
Hey.
So nice.
Show your bones.
Nice, a decent day. Not. If I can be real honest with you, it's not. It's not a good day. It's not a great day. We're just green all across. We've been so flat recently. Things trading up and then back to where they were at the open, and things trading down and closing to where they were at the open. And
I increased my position into UDAL yesterday.
You're going higher into the Dow, huh?
Yeah, and I also increased the short.
It might be a good time to do it. And just to kind of wrap it up real quick, Bitcoin is up just a little bit. She's at 9,700.
How's your boy ETH doing? Ethereum.
She's pretty. Bitcoin is at 8% for the week. You want me to look up Ethereum? Yeah,
please, would you?
Up real quick. Ethereum sitting at $788.
Oh, doesn't that feel good?
That's 21% for the week. Remember, you were on the phone with me a few days ago, and I had moved everything into Litecoin at 149. She is sitting at 168.
She's gonna move higher. She's gonna move higher.
I think so. I think she can push 190 again, and I think I'm gonna get out there.
Do you think it'll repeat from last year?
Just completely rally and
it
then
went from 6,000 to 16,000 in 6 months.
Oh, you're talking about Bitcoin? I'm talking about Litecoin.
Well, I mean, same thing. They both They both followed that hype.
The herd mentality.
Yeah, all the coins did.
Now, honestly, I've heard of places. Apparently, a lot of places in California, restaurants and some stores, will take Bitcoin as payment. But I've never heard of anybody accepting Litecoin for payment. The Al's Pizza.
Yes.
Apparently takes Bitcoin. I thought that was pretty interesting.
It's so expensive. It costs more for the fee than it would actually cost for like the pizza.
Yeah, but I'm sure like deep down, the people who are actually doing it haven't figured out that it's still cheaper for them to own Bitcoin in the grand scheme of the tax game. That at the end of the day, it might be cheaper to pay that like $3 fee to pay a $20 bill. Honestly, I don't know. I don't know enough about it, but
What don't you know enough about?
Like the fees, like I know that the more demand for Bitcoin causes more demand for fees.
Can we do a crypto episode next?
Next, we're gonna do it, and you're gonna walk us through everything.
Okay. All right.
But so that we don't just ramble on the topic today. I want you to give me
market news.
You can't hit me with the answer there, real quick.
What?
What causes the fees to go up and down? So if remember that time you sent me $5 and you paid $11 to do it?
Yeah, I got cut.
I'm gonna put you a blast on there. But you did it just to show me how cool it was.
Yeah. I scanned your phone and I sent fucking currency to your phone.
Yeah.
So got slammed with an $11 fee.
So if you had sent me like $500, it still would have been an $11 fee, right?
I think so. I think it's I don't know if it does percentage-wise after a certain point, or if it does just a flat rate.
We're gonna have the answer on the next episode. That's gonna be part of the crypto episode.
Well, it's gonna be fun.
It will be fun. So let's go into market news with Nathan Oliphant.
All right. So big news that came out this morning. Warren Buffett and his company, Berkshire Hathaway, has bought, listen to this number, 75 million shares of Apple Incorporated stock. Is it Apple Inc. or is it just Apple stock?
It's Apple Inc. But
Apple
yeah.
Inc. Apple stock. Ticker symbol AAPL.
And not only was it 75 million, it was 75 million in the first quarter alone. They already had a sizable stake. They just bought a shitload more. And, of course, we know that news will absolutely move an entire market.
Dude, it was up like 8% today.
Which was?
Apple.
Was she really?
Was it 8 or 4? Was she up? She was probably up $8. That's what I said.
I'm gonna get the numbers real quick, but yeah, that once again, I'm gonna bring it up. Apple has that market cap, and Warren Buffett has that influence to move markets. And if both of those are positive comments,
she was up $7 at one point.
It's gonna just skyrocket. Apple finished up another 4%. She's pushing 183. At the beginning of the year, I texted you, and I texted several other people that you are absolutely ridiculous that if you do not think Apple is going to 200 this year, by the end of the year.
Do you want to put the call on?
Dude, it's expensive. I don't even know if I'm about it. It's pricey, though. But
I'm looking it up right now.
I think it's it might play out in your favor. It may just pay out in your favor.
You got enough. I'll tell you that. I'll tell you that you have enough. We got enough. It's expensive. It's really expensive.
It is really expensive.
It's almost like $700.
It's run about $700.
Yeah.
Dude, that's a quote unquote tough call.
By the end of the year,
but,
God, that's
honestly, like I absolutely think. I think within 5 years, Apple will split. It will be so high that Apple will split. Talking $300-$400 a share. It's going to keep going. It's a package. Not a package goods. It's a consumer goods company. It's not even technology. It's consumer goods. Everybody buys their products, just like everybody buys toothpaste. Everybody buys. It's not that extreme, of course, but you get what I'm saying. Dude, there's so many fucking iPhones sold. They sold a record amount. It was over 100 million iPhone 10s alone. Some ridiculous number.
Listen to this. At the money calls for January 18th are $13.13.
That's ridiculous.
And $15.80 below the money.
So basically, yeah, that's. But I think it will work out in your favor. if I can be real, one thing I've always noticed, Apple has always been priced very solid. You notice that? Like, it's always very, like, 3% dividend. Okay, that's solid. 12 PE, or no, it was like a 19 PE, solid.
Yeah.
It's always traded like at the exact price, but her premiums have always been very expensive. Yeah, so Apple has just kind of been pulling the markets up all around. But what else we got going on in the market?
I didn't really look up anything else. I should have.
Yeah.
Is Trump doing anything?
Not so much Trump, but check this one out. Elon Musk.
Oh,
he had
earnings, didn't they?
Dude, he had an earnings call, right?
Yeah.
And it was rather bizarre. He sounded so casual. Like, if you were just listening to him talk, it sounded like he was just kind of sitting on his couch talking on his phone with like no headset or anything, no speaker, just like sitting on the couch with his feet up. Maybe sipping a nice Shiraz. And it was rather bizarre because he went over earnings and he sounded so blah about it. And when they started to take calls, I'm going to put a link for this. Like, you can actually listen to it. I'll put a video up that CNBC posted. But when they started to take analyst calls, he started to dismiss some of them and would say, next question. I'm not going to answer that. I'm really not going to sit here for dry, dull, and bonehead questions.
He said that shit?
He said that, and then there was another analyst that asked about Model 3 reservations, and it's like he basically asked how much percent of the Model 3 the reservations have gone out yet. And he said, that's really not relevant. He said something along the lines of that. It was like, that's really not relevant. Let's save that question for another time. And at the end, like, he just started dismissing. He said, we're going to go to YouTube, or we're going to take questions from YouTube. And he actually legitimately started taking questions from there. And it was just bizarre. He just seemed so whatever. And at the end of it, he said something along the lines of, shorts going to get burned soon. Flamethrowers will be in on time. And it was just a little, like I said, it was just bizarre. What? And this is coming from Elon Musk.
Wait, he said, say that again? Are you sure he said that?
Something along the lines of shorts are going to be burned soon.
Okay, I'm looking it up.
Yeah, I'll put a link to this in the show notes. And
shorts are going to be what?
Said, shorts are going to be burned soon. It was something like that. It's probably not word for word. And to wrap it up, he also said that I have absolutely no desire to cater to day traders, so sell our stock and leave us alone. It's something like that. So rather bizarre, but just kind of like it was almost like a fuck you earnings cast.
Okay.
And I hate to say it, Nathan, like, you wanted to listen to it the other day. You were talking about listening to it, and we were going to do that as an episode.
Dude, what the fuck?
We missed that. That would have been a great fucking episode.
How do you just Babe Ruth the market like that? You just point out the fucking outfield and say, I'm about to hit it out of the park. Get your fucking shit together. It makes me want to buy like Tesla, like just to say like I got it.
You think that's what he's doing?
I can't. Such a speculation. Are you kidding me? He could be pumping and dumping his own stock.
Dude. It's a speculation. But could he be right? Could he come out tomorrow and say that there's news that he opened 3 more factories that are producing model whatever?
It's selling. He'll say selling.
Yeah. I don't know. It's hard to really grab onto Tesla. And once again, like I said, I'm going to put that video in the notes where you can actually listen to him say these things.
I want to watch it. I think we should do a cast after this.
Double cast. But yeah,
it's market news with Nate.
Nothing really going on. Dun, 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 dun.
Thanks for tuning in.
So Yeah. So interesting little week there. So let me see if I have anything else. No. Yeah. No. All right. It's
How did
time to move on here.
did you say how the market ended on the week?
I didn't do the weekly. Do you want the weekly
I want to
numbers?
hear the weekly numbers.
All right. You're gonna have to. I don't know. You're gonna have to give me a second. 'Cause that takes time.
All right. Well, what should I talk about then?
Well, today's topic that I would like to talk about is set it and forget it investing.
Oh God.
But what do you, I mean? Is it a thing? Is there really such thing as set it and forget it?
Of course, there's such a thing. People do it all the time.
I feel like most people who own a shitload of stock are set it and forget it investors. I'm gonna coin it if it hasn't already been coined. Slow cooker investing or crock-pot investing. I like it, crock-pot.
Jason Bessing's gluten-free crock-pot investing.
Gluten-free crock-pot. You know, I actually have a gluten-free slow cooker cookbook.
I was about to say, it's a gluten-free slow cooker. What's the difference?
Your slow cooker cookbook.
I gotcha.
Recipes. Because a lot of the stuff calls for like flour. So, but yeah, so set it and forget it investing. You know, basically
Crock-pot.
just hey, I want to buy a bunch of this, and I'm gonna do nothing for 20 years, but accumulate a bunch of these things, and I'm not gonna watch it. I'm just gonna buy it and reinvest the dividends and collect the dividends. That's more or less what it is. It's you've identified the security, whether it's a bond, a stock, or the real estate that you want to own, and generate income with, and deciding that no matter what happens in the market, if it's a down market, I will continue to buy. If it's an up market, I will continue to buy, and I am just going to leave it alone, and I hope in 20 years I'm rich.
That's a little different than setting and forgetting. That sounds more like averaging in.
Well, I mean, you can debatably, yeah. Yeah,
Okay.
I get what you're saying with that, but what I'm kind of coming from is like there's ways that on certain brokers, your bigger ones, E-Trade, TD, whatever, you can literally click a button or send a message, whatever you do. You click buttons and stuff, and you go to
Buttons and stuff, make it a
you
t-shirt.
click buttons and stuff. No, that's click buttons and stuff, dude. I will put that on a fucking shirt and sell it. I will give 10 away for free.
You heard it here. RTG.
But you can actually set your broker to anytime there's a cash deposit or more cash enters the account to buy this security. So you can literally click, okay, I want to own Coca-Cola forever, and every time I put in $100, I want it to buy Coca-Cola, and every time I get a dividend check, I want it to buy Coca-Cola.
Well, okay. Well, this is what I think with set investing, just to kind of just iron this out. Is let's say you could do that, and let's say eventually you wanted to put $10,000 in,
Mm-hmm.
or you could get $10,000 now and put it in now, and then set it in and just ride it out for 20 years. I'm just gonna let the volatility sink into it. It's like a knife. Let it just carve it out and then come back up and just ride the growth out.
Mm-hmm.
Take your 4 average a year or 10 average a year and just suck it in the gut.
Just suck it in and hopefully that stock that you bought, your $10,000 has like
1,000, yeah, 10,000
has turned into 100,000.
Yep.
Over the course of 20 years because you've ignored market gyrations, you've ignored the daily blah blah blah. You don't even listen to Rebel Trading Group.
Nope. You just say fuck it. I gotta go to work.
You say
now.
fuck it. I gotta go to work. I have real life. I gotta worry about. I identify that I want to buy this and I want to accumulate wealth with it, but I understand that I don't need to be trading it. I don't need to worry about it. So what do you think it is more suitable? Or I'm not going to use the word suitable. Do you think it is more profitable to do set it and forget it investings or to actively trade your account?
Oh, man, I have bad experience with actively trading.
And that's exactly why it's hard to get that answer because there's no one correct answer. For the most part, I feel like most people who play this game would tell you that the long-term people who do not trade make more money. And that's exactly what Warren Buffett does. He's a different story though. He's He's multi-billionaire. He pulls in billions a day.
It's disgusting.
It's absolutely disgusting.
75 million shares.
He purchased 75 million shares in a quarter, in 90 days. Do you know how many blocks of 10,000 that is? If you're buying in 10,000 blocks, that's moving $1 million at a time. Am I right? It's 100 times 10,000. Yeah, it's moving like $1 million at a time. If you did that 10,000, 75 million, what's that? 750 or 75,000 times you got to do that? Something like that. That's ridiculous. Anyway, but set it and forget it investing. Like,
I'm sorry.
Whatever. It's mind blowing, man.
Buffett. We'll get those shirts made.
He's Warren fucking Buffett and the Dow fucking Jones.
Yeah.
But what kind of, like, do you think?
I think a lot of things.
Like I said, do you think it's more profitable to actively trade, or would you rather set it and forget it, or at least set it and generate income for a little bit off of it?
Okay. Here's the thing. Here's how I look. I don't look at it about like really profit. I'm more looking at it about like risk. I think setting it and forgetting it. And if you've done your research, you haven't just said, I don't know, what's a crazy brand? Fucking Turtle Beach. There we go. You're like, yeah, I'm a gamer. I like Turtle Beaches. I'm putting like $10,000. Pump it in right now. Buy me one of them blocks you're talking about. Give me one of them blocks of Turtle Beach, please. Sounds like a drug.
Mm-hmm.
So, I think if you pick the right companies, I think sitting it and forget it will work out more in your favor. As I hate to say this, but a safer or less risky option. Because
it's definitely less risky.
Yeah.
Every time you move money, there's risk.
Yeah.
But in the long term, for set it and forget it investing, you're putting more money into less things. So if you're a trader, you might have 50, 60 different positions open.
Okay.
It depends. With set it and forget it investing, you don't want 50, 60 different companies. You want one fund, or you want 3 companies that you go big in.
Here's the thing. So the time period is what, 20 years?
Yeah. If it's I'm gonna go 15 plus.
So that means, are you like assuming that you're gonna make the same amount of money, or equal, or close to the same amount of money in less time as a trader, or would you do 20 years of active trading? Because that would be exhausting.
20 years of active trading, that's a lot. Now, only certain people can actually enjoy that.
For 20 straight years?
I mean, I have tons of fun in just trading the market.
Like sometimes
that'd be something I would love to do. I wish I had the money to where I didn't have to work, and I can just open my laptop, turn on CNBC, look at Jim Cramer's face, and just start clicking.
Sometimes my one-day chart looks like a heart attack patient.
Yeah, it's just.
And that's what it feels like.
It's up and down. It's sporadic.
Yep, I cannot do that for 20 fucking years, man.
Can't deal with that for 20 years. Yeah, especially when you're in a market that's like this. It's just kind of volatile and just sideways. And 1 minute you're up and the next minute you're down.
Yeah, put a fucking Democrat in office, man. I'm tired of this shit.
Yeah, but whatever. Yeah, so let's falsely manipulate markets for the sake of our political gain.
Isn't that crazy? Did you hear my theory? Should I tell my theory?
You go for it, man. No hold back. It's our podcast.
All right. So this is my theory. It's not true at all. I have no evidence to base this up. So what I think is Donald Trump last year rode the rally, got all these freaking jobs, tax cuts, jobs, stock market's hitting all-time highs, peaks in January. And then he's like, okay, we need to sell our shit. We're telling everybody we need to sell our shit. So he says, boom, tariffs, stock market crashes. All this shit, tariffs, stock market keeps crashing. It's been crashing for this whole quarter.
I wouldn't say crashing.
What?
I'd be careful with the word crashing. It's not crashing this quarter.
You don't think so?
It's pulled back. I'd say crashing is like we're selling off day after day, like the madness continues. Another 300 down, another 400 down. I feel like that
was like that in February, dude.
It was, yeah, but we've recovered from that. We haven't seen like a full straight on 15-20% bear market here. Like, yeah, we're sideways and things aren't looking so hot at the moment, but we have the earnings to at least back us for a little bit, to at least put in this floor.
Dow Jones is down 6%.
I wouldn't say that's a crash.
What? What's a crash? 20%?
I'd say plus 15.
Plus 15?
Plus 15 within 6 months. But
all right.
Yeah. So what kind of, if you decided, you know what, I'm going to focus on my life and I'm going to work and I'm going to quit trying to guess and time the market, and I just want to go big and do Crock-pot investing. What things are you looking for? What are you looking out of that company or that fund? What do you, I know there's got to be at least 3, and I'll tell you my first one is dividends.
Okay.
That bitch got to be paying dividends over the course of 20 years. If I'm not getting a check to at least leverage the gains and kind of reinvest and really build the wealth and compound, then I wouldn't say that's a set it and forget it stock. That's a trading stock.
This might sound silly, but one of them for me is like I look at like macroeconomic stuff going on in the United States, and I didn't go to school for economy. What is that? Is that a thing?
Economics.
I
didn't go to school for money. I didn't do this for money.
I didn't go to school for the economy, and but I know I went to school for political science, and I know that political influence has a huge market effect.
Mm-hmm.
So I know in this political course, I pay attention to what industries Donald Trump's talking about. When I look at funds or companies.
Would you put that as, you would take that into like, so you would take the things that Donald Trump is saying now and doing now, and you would apply a 15% or 15-year outlook with those actions?
I would do an 8-year.
You do about 8 year?
Yeah.
Is 8 years set it and forget it though?
Yeah.
I guess yeah.
Oh,
yeah.
That's recession proof.
I mean, would you buy something today, and I said you're going to buy it at the market price and you don't get to know what it trades at for 8 years from this date? Would you be comfortable with that?
Yes. Or I would not be comfortable.
Based off of Donald Trump's.
Or I would not. Or the opposite. I would look in the opposite way. So, for example, like opioids. He's doing a war on opioids.
Mm-hmm.
You feel me? So companies that make like what is it, Oxycontin, all those companies. Stay away from biopharmaceuticals that make like opioids and stuff like that.
Okay, I get what you're saying. Things that are of hot topic, hot topic, button pressed issues politically, like opioids. Maybe even right now, still don't touch cannabis stocks.
Why not?
Because they're still too speculative. We're still a ways away from the legalization of marijuana, and now it's just, I feel like still now is not the time. If you're going from right this second to 15 years, I don't think so. Especially 8 years.
Legally speaking, from a business stance, I think it'll be easier to make money when it becomes legal, like federally.
Oh yeah, absolutely. Once as everything starts to wind down and the states start to win their case over the federal government, it'll all start to, all the checks will start to fall into place. Absolutely. But I get what you're saying. You want to take the current issues at hand. Yeah,
that's one thing I look at.
And look at a 15 plus. Okay, I kind of get that. Do you have another example other than like the opioids thing?
I mean, you said dividends. I said that. Do you have another example?
Definitely dividends, because that gives you the ability to compound. And another thing I would look at is market cap. For a set it and forget it stock, I'm looking plus 35 billion.
Plus 35, that's small, isn't it?
It's on, of the large caps, it's on the smaller end, absolutely.
Yeah.
Because mid's probably going to go to about 20 to 25. But 35 will start to be your lower ends. But even then, to be honest, like 35, that's just bottom of the barrel. I'm not even looking at that. I'm looking at your Coca-Cola. I'm looking like 120, 140 billion plus.
Yeah.
Coca-Cola's, Pepsi's. I might even just, something like the Dow Jones ETF.
Yeah.
30 of the best 30. 30 of the best 30. 30 of the best biggest market caps.
Yeah. Yeah, man. That's one thing I look for is diversity as well, and I guess you could go into buying like ETFs and funds.
Mm-hmm.
For me, long term, I like the Dow Jones because I'm retiring in less than 40 years, around just about 40 years. So a 40-year, I want to look like the 40-year chart on the Dow Jones. I'll look that up.
I bet it's disgusting.
Yeah, but it's just rips.
Yeah, but 30 years or 40 plus years on the 30 largest economic movers in the United States. The company, like this is you got some drug companies in there. You have some food and beverage. We have telecoms in there. We got a little tech. We have financials. It is a good diversity, a good basket to hold. And I really like the Dow because she pays a much better dividend because she holds these huge blue chip stocks. She has bigger dividends. The S&P 500 may hold, I honestly don't know the number, but off the top of my head, I'm going to say it might hold about 186 stocks. Very specific number that don't pay dividends. So that kind of cuts into how much you're getting, kind of dilutes it down a little bit. But with the Dow, you're getting 30 companies. You're getting like almost, I think it's almost, if not more than 3% dividend. And if it's DIA, it pays out monthly, which is also sexy. But yeah, something like the Dow, or I mean, you can even go with the S&P, obviously. Something that is going to have a nice diverse range, and that no matter what happens, it will contain some sort of sector that will profit in a bear market, a down economy, wartime, and something that will do fantastic in times of economic expansion and growth. So diversity, especially through funds and ETFs, make it easy to do set it and forget it investing. There's so many ETFs you can literally just go buy and not have to check for 20 years.
Is this right? The Dow Jones went from 1984 to 2014 from under 50 to over 10,000.
Oh yeah, Kramer says that the Dow Jones was trading like in the 800s in the 70s.
What?
Yeah.
That's like 20. That's 30 years right there.
Mm-hmm. So, set it and forget it. Invest. There's a lot. We always got to cut back. There's a lot of things out there that really make it easier and make it a lot less stressful because it takes out that fear of having to time perfectly and buy this stock. I don't know if it's I don't know. Are we gonna get rich off of it? Forget it. Give me Coca-Cola. Give me a 3.5% dividend. Give me 5% growth every year, and I'll check it in 20 years, and hopefully by then it will have tripled. That's the mentality behind set it and forget it investing. Just give it to me, ignore everything, and it takes away the stress of the market. It takes away the daily highlights. It takes away the Elon Musk conference calls and the Sprint and T-Mobile mergers. Shit, that means nothing to you. If someone was owning Sprint or T-Mobile as a set it and forget it stock, they're fucking morons.
Dude, set and forget the Dow Jones, man. That's what you do. That's all you have to do.
Set it. Just put everything in DIA. Just buy it and reinvest the dividends. You're good.
Thanks. Have a great day.
Thanks. Have a great day. The podcast is over. We just ended the entire series.
Thanks for joining us, guys. This was a great series. We'll join us for our next series. It'll be Rebel Trading Podcast 2. because season 1 is over.
Because this one, series 1.
Yeah.
This is
Should we
2.0. This is a reboot.
Should it be
It
a
would be a
season?
reboot.
Should we do seasons?
Yes.
Okay, season 1 is over.
Earning seasons.
Earnings seasons is over, so is Rebel Trading Group season 1.
No, but for real though.
Yeah, we're not ending.
We
don't have time for that.
If I really wanted to be truly set it and forget it, the Dow is something that I would absolutely do. Coca-Cola, Ford, even Pepsi, GM. I'd even say GE at this point.
Really?
I think
okay. When the world
Apple,
is going to, when light bulbs are going to become a commodity, do you think they'll be traded as like futures?
Say that again?
Do you think light bulbs will ever be traded as like a commodity?
No.
What? Why not?
There's so many. I mean, because there's so many other companies that make light bulbs.
Let's think apocalyptic here. Boom! The nukes go off, and now light bulbs are scarce.
There's no.
And the
there's
futures
no
market
electricity
on light
to power
bulbs
them.
has now exploded. GE stock rises over 10,000%. How do you feel about that? We should make a movie about that. We'll invest in GE now, and then we'll blow up everything. We'll start a global nuclear thermal war. We'll start a war with nukes.
Isn't that what Bill Gates trying to do with the weather?
Yeah, we'll kill everybody, and then we'll make light bulbs the #1 currency. It would be like Fallout, how they all use bottle caps for currency. I don't know. Money was useless. Light bulbs is a new currency. Everybody needs light bulbs.
But there's no power for it. There's no energy.
Well, I mean, utility company. Okay, we'll invest in utility companies. And GE. We'll just dump our money in.
I don't like it.
What?
I don't like it.
What? Are you long GE?
If I had more money, to be honest, if I had $100,000, I would put a nice 4% stake in GE.
4%?
4%. It's not much. I'd do it, though. What's that, like 320 shares? Not bad.
Something like that, yeah.
But, yeah, set it, forget it, investing. That's basically the gist of it. It's Crock-pot Investing. I like it. You put everything into one, maybe a few baskets, and you can either contribute to it or not contribute to it. But your goal is just, hopefully, in 20 years, makes a shitload of money. Honestly, when I have kids one day, I'd like to build them a very small portfolio of big blue chips, like a little Ford, a little Disney, maybe a little something else, and then just buy a little bit of that for them every month until they're 18. That'll be kind of set it and forget it investing. And my goal is that when they're 18, that they will have maybe tripled, quadrupled the size of that account over the time, of course, of years.
You're gonna put it in triple leverage?
700% returns. No.
What?
Triple leverage over the course of 20 years.
Let it ride, dude.
No, I'm good.
What's wrong with that?
I don't know.
What do you mean you don't know?
I don't know.
Multiply the Dow Jones gains times 3 over a long period.
I know, but there's
time.
problems. There's tracking error. Then there's super high fees and shit.
Where's it? Fees in ETF.
And there's no dividend.
There's a little dividend. There's some dividend.
18 cents a share. I think I'm good on that.
So you just buy a bunch of PEY?
I don't think it qualifies. See, I'd rather do that. See, set it and forget it also takes out you don't want to do something that has high amounts of risk.
But it's
or something
Dow
that's
Jones over 20 years.
But a triple leveraged.
Over 20 years.
But triple leverage. The fees that you're paying this shit it just distorted.
So you're saying I'm gonna basically pay a premium when the market's going down. It's gonna suck it out of me.
Oh yeah. Sure, it did great in the past few years during an expanding economy and quantitative easing and buying back of securities and shit. It's great then. But long term, I think you might get wrecked. Unless you're selling the covered call. Then I say fucking go for it, dude. Just continue to sell that covered call, making like 8% gains every 2 weeks. Just pop, 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 pop. Oh, that's sexy. I like that idea. Nathan, what are you watching this week?
I am watching Twitter.
Ooh, you have an answer. I'm more happy that you have an answer than I am that like what your answer is. Why are you watching the twatter?
I'm watching Twitter over a long period of time. I'm watching Twitter for the next 3 years, or I guess 2.5 years now.
Yeah. What do you like about it?
I like that Donald Trump is in office, and then that ad revenue is the number one, like payer in social media, like Snapchat, Instagram, which is part of Facebook. Facebook itself uses ad revenue as their actual payments, right?
Mm-hmm.
I don't know.
That's how they generate
vendors.
income.
Yeah. So I'm saying, like Twitter, they have the president. Everybody's watching the president. The media has so many people just watching Twitter, and they're just pumping ad revenue.
But is Twitter expanding because of it? Are more people saying, you know, Donald Trump, he's been more active. I think I need to sign up for a Twitter.
No, that's not maybe not. But I'm saying I feel like it has a lot of growth potential because he is in office. It's got a lot of political influence to it.
Give me your price target and your time period.
Okay, so what is it trading around, like 30 right now? 30 something?
I'm going to get you that exact answer. I think it's lower than that to be quite, if I might be quite frank with you. Holy shit, 3104. Dude, I remember this thing at like 13.
Dude, I'm serious. I'm telling you. Back when Donald Trump got elected. Look at Twitter. It's insane. It's gone up.
There's only 750 million outstanding shares.
It's insane, yeah. So I'm looking at Twitter. Whenever Donald Trump's in office, I want Twitter. I want more shares of Twitter.
Yeah. I kind of like it. So it's at 3104 at close. What is your price target and your time period? Is it 40 end of year?
No, I'm talking the end of his presidency. It's
40 end of 2020.
Yeah. 40 2020? No, I'm saying fuck me. I would not call 50 Twitter.
Really? You're going to call 50 Twitter January 19th, 2020. Do it. Do it fucking right now. What's the fucking call on? What's the price? I'm getting up the chart. Can you go out 2 years? Can you go out that far yet?
I don't think so. Well, maybe with Twitter.
Oh, you certainly can. January 17th, 2020. All right. 40 call? I got to type in a
50 call, baby. Jesus, that's expensive.
It's like 260, bro.
Holy fuck,
It's really not. It's really not. 200, it's like around 250, 260. That's really not. Dude, if it goes to 50...
I just can't say
Dude, if this thing gapped up to like 36, just randomly, that premium would double. If not more. That's a ballsy call.
What are you watching?
50.
Yeah, I know. Dude, we'll talk about it.
Believe it or not, Nathan, this is what I'm watching. I'm probably not going to pull the trigger, but I've been curious lately. Of everything that's been going on in the news, I haven't heard dick shit about pharmaceutical companies. I'm going XLV.
What?
Look at a 1 month and a 3 month chart. Look at a 1 month and a 3 month chart, though.
Hold on, I'm going.
She seems to have established some sort of floor, and we're not quite there. We're relatively near it. And she's on a pullback, and I think she can run up past 100 by the end of the year. but I haven't heard anything about healthcare. And for the listeners who do not understand or know, I don't touch healthcare. It's not something that I'm interested in. It's an industry that I kind of hate. I used to work in a hospital, and it kind of made me bitter towards it. And just for many other reasons, debt. A lot of them are gambling on hoping that they're just pumping money into research and development, hoping that they can land something, and they don't. They have to have strong pipelines. Like, they can't just have one breakthrough product, because then that product will sell, the stock price will go up, and then they don't do anything after that.
But you got the whole market of healthcare.
Yeah, but here you got the whole market of healthcare. That's why I like XLV. It's a sector fund. So it's something I'm interested in watching if she can pull back more. But it's not something I'm very knowledgeable on. I hate to admit. It's not something I know a lot about.
Seems like a gamble.
In my opinion, it's a gamble. But if there was any way I was going to play the healthcare pullback, it's going to be XLV. Hands down.
All right. Well, that's a podcast, man.
I think that's a podcast. It was a fun week. It was an interesting week.
Oh, God. I'm happy to be out of options right now.
Yeah. You got to re-ask the portfolio, right?
Yeah, I got to take a step back.
Do you have what approach are you taking? Are you taking a swing trading, day trading?
No, I'm not trading for a bit. I'm going to fucking just start investing it.
Kind of set it and forget it a little bit. Kind of put it in.
It's a pretty good time in the market right now, I feel like.
Yeah, I think that if you are somebody who is going long 5+ years, this is a good time to start buying as much as possible. Some of your favorite stocks. Take everything with a grain of salt. But in my opinion, I think it's time to start loading up.
People are shooting out of the correction. It's really weird. Like, some companies are staying with it.
Some companies are coming with it.
Yeah, so they're like shooting up. It's really weird.
Some are being held back. Some are getting, and that's the economy. Not everyone can win. Some companies are going to win. Some companies are going to lose. But
place your bets.
Place your bets, people. Place your bets. Seven out.
Apple, rocket.
Anyway, fun episode, man. Yeah. Set it and forget it. It's honestly my favorite style of investing. Yeah, it's kind of where I'm at. I'm like basically there. So,
well, if that's our episode, there's no other. Check us out on Facebook. God, I need to fucking upload some videos.
Yeah, we gotta get more active on that.
We need to hire someone. Get some interns.
Yeah. Well, when I send you the file, go ahead and.
Yeah, send it to me in email, and I'll upload it like that. Okay, so we're on Facebook, facebook.com/Rebel Trading Group. On our email, check us out. Send us an email. Any comments, questions, concerns, insults, most definitely insults. We're ready for insults. Corrections, we're ready. We're all about corrections. We're talking shit.
Yeah, if I'm wrong, if I just ramble, I want you to roast me and tell me everything. And not only do that, but at least show me where I can get the right info. Be like, oh, here's why you were wrong. Here's I found that.
Don't say.
Like, oh, okay. Don't just say like, oh, yeah.
Exactly. Come on. You better help us out. Check us out. Our email is rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's. That's it, man.
I had fun. It was a good episode. It's one of my favorites.
Thanks for joining us. And is it Monday yet?